Welcome back to the podcast. Today I'm joined with Luke Sauter. Luke, welcome to the show.
I'm so happy to be here for a million reasons.
Awesome. Before we get into those million reasons, tell us a little bit about yourself.
Sure, sure. So, my name's Luke. It's great to meet everybody virtually anyway. I'm a certified public accountant, licensed and registered in the state of Illinois. I'm also a personal financial specialist, which is their designation that's sort of equivalent to a CFP. A lot of people are familiar with that one. But they only grant the PFS to CPAs. I'm also an investment advisor representative here in the state of Illinois, and I'm a former Fortune, I'll call it 200 executive. This is a second chapter for me and a chance to, kind of give back in a way, use my brain in a way that can help people out, help families out, help businesses and nonprofits out. So my new day job, I'm the president and CEO of Vidarrow Investment Advisors. We are a fully independent registered investment advisory firm, which basically is a fancy way of saying I'm a fiduciary. My company is a fiduciary. We're not tied to any bank, any broker dealer. And really, we just are here to help our clients in a good old fashioned, in their best interest way. We don't sell any products, we earn no commissions, none of that. We're just here to provide advice and help people with life's journey. So that's a little bit about me. I'm also a very proud dad. I've got two little girls at home, Gemma and Violet. They're 10 and 5. And of course, my better half is Kelly. She's an executive in the PR space. And it's perfect. We like balance each other out. I'm kind of the analytical, finance-minded person, and she's the spark, 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 in the best way possible, media and creative type person. So that's a little bit about me.
That's awesome. Thanks so much for being here, Luke. Um, let's give some context to the audience here, to the listeners, because we go way back. Um, and I guess I will describe you. Here's how I'll describe you. When I left my corporate job, you were the boss that I put my notice into.
This is true.
And
It was
yes,
a
you were,
devastating moment, by the way.
that was a what?
It was a devastating moment, by the way. For me, anyway. I was distraught about it.
You didn't let me leave a conference room for 2 hours as you tried to convince me to stay. Um,
I
and
remember
then,
that. That's true. I did try to talk you out of it. Yeah.
I mean, it's one of these like formidable memories. Like in childhood,
Mhm.
we have these memories, and in corporatehood, I think we also have these memories. And you were a wonderful boss. I could not have imagined somebody reacting to me wanting to leave for family reasons and raising babies better than you did. And I thank you for that. I don't know if you remember this, but in that 2 hour conference room, when you realized you were not going to convince me otherwise, you said, okay, if and when you're ready to come back, don't come back to corporate, start an accounting firm. And I thought that was the stupidest thing anybody could ever tell me. And you were right. So I want to go on public record, Luke. You were right. It's wonderful. I love it. And sometimes we just don't know where life is going to lead. And here we both are sitting on a podcast years and years and years later doing this. So thank you for being here. Thank you for everything you've done in my past as well. This is exciting. Thanks for bringing your expertise today in this new second chapter.
I'm really thrilled not only to be here, but to have seen your success over the years. The one thing, part of the reason why I was devastated when I heard you were going to leave, it's because I was assured mentally of your success. I knew you were going to be highly successful at whatever you decided to dedicate your attention to, and it was very much our loss. But you did it for the right reasons, and you did it the right way. And I do remember some of those conversations, and I think. Um, there's something very gratifying about knowing that never mind your success. I can tell by being here with you today and seeing your smile, and I've now listened to some of your stuff. I can tell that you're finding joy in this, which is it's super important. And so I'm really happy that you found your path to joy, Erica. I'm really glad
Oh,
to be here.
thank you. Thanks, Luke. Okay, I'm going to tell one more story. We didn't talk about this beforehand. You don't even know what I'm going to say, but
Mhm.
it just popped into my head, and I feel like it's a story worth worth telling,
Okay.
that speaks to
My
your
palms are
character.
sweating, just so you know. I'm getting nervous.
I know it's totally good, but I get that you're nervous right now.
Yeah.
Because I think there's a lot of opinions about financial advisors
Mm,
in the space. We won't get into it. I have my own
yeah.
opinions. Um, and so I think I want to tell the story because it tells listeners about the heart of Luke. I remember being probably in the last year of my corporate job, our team had an offsite in downtown Chicago. And I think this was my idea. And you were like, great, you should plan that, Erica. And so I did. And
Sounds right. Yeah.
and so I planned it. We got the team together. We had either appetizers or lunch somewhere. I just remember there being a lot of appetizers,
Yeah.
and it was like the Chicago, downtown by the river, Chicago restaurant, and there was appetizers everywhere. And we were about to leave, and the restaurant staff brought out more appetizers, like not knowing we were about to leave. And I was like, well, we have to get to the next event. And we have like now we have all this food. And you without a thought just went, hey, looked at the staff and said, hey, can we wrap this up? There's a lot of people who need food in this city. And we took these bags of leftover appetizers and walked down the streets of Chicago on our way to the next thing we were doing as a corporate team, just literally handing out food to people who were sitting on the streets who needed food. And that was not that was not something that had ever been exampled for me, especially in a corporate space. That was not, I think there's a lot of corporate teams like on this day, we're all going to show up at this place and do community service. Like, I get it, that happens. But when you can bring that into your day to day, it just speaks to the character of the person and where the person's mind is at. And it inspires other people. There is a ripple effect to that. And I think that just speaks to your heart. And I have this very vivid memory again of that happening. So that is Luke Sauter in my mind, is wicked smart CPA with a good heart.
I, I'm speechless that you remember that. I do remember that actually, and more so, what I remember is how all about it you guys were. You guys were excited about it, and as we were walking down the street, you're 100% right. Like people were very grateful, and there's like I love movie quotes and song quotes and all this kind of stuff, right? And I don't remember the name of the song. There's some Dave Matthews song I think that starts like, "Could I have been?" And as you were telling that story, I'm reminded of that because it's like any of us could have been, somebody that was born somewhere far less fortunate than we're all sitting today, right? With far less resources and things available to us. And, shame on us with our privilege if we don't, take the time to give back every so often. And, sometimes the best moments to do it are those that are not planned. There's a reason people talk about random acts of kindness, right? And,
Yeah.
uh, I'm a huge believer in that. Karma, I think, is a real thing. If you treat people well and you're kind to people, life is going to find a way to pay you back, in my experience, in my opinion. And, um, I'm just so glad that you guys were receptive to that. So thank you for that. I
Yeah.
completely forgot about that. That was good
Yeah.
food too, by the way, if I remember right. That was pretty good stuff.
It was. Okay,
Yeah.
we've gone completely off tangent, all in good directions though, but I
Yeah.
want to make sure people who have come to listen to financial advisor things get that. So let's dive in. You had mentioned you're a CPA, which I think everybody listening here knows what that is. They might not have heard of a PFS. So I just want to reiterate that it was a personal financial specialist. Is
Yep,
that
it's
right?
one of the designations that the AICPA offers. There are lots of designations that the AICPA offers for their professionals if they want to explore certain areas of practice more deeply. And I would definitely encourage everybody to check those out. Your point on financial advisor is super well taken. Um, I'll start with a little story if I could comment on that for a second.
Sure.
So I'm in
Yeah.
this group of new people that have launched, similar firms, and the topic came up, not by me, by one of the other people in the group. So how do you introduce yourself? The person says, and I want to hear. And it's like, well, introduce where? And he's like, so if you're in a public setting, You go up and you're like, "Hi, I'm Bob," or "Hi, I'm Kathy, and I'm a," what do you say? And we all kind of laughed, and we were like, "Why are you asking us this?" And he said, "Because I've been at this now for longer than I've been at it." He said, I've been at this for maybe 3 years. And I have found that anytime I use the words financial advisor, everybody cringes. They may do it in a way that's more polite than like a ooh scary face, but you could tell the conversation at that point is just over. Like they just don't
Yeah.
want anything to do with you. And so we spent a while talking about why this is. And where I think we all landed is the term financial advisor has become far too expansive. There are way too many people that, and it's nothing against people, I'm sure they're all operating within the context of the rules, but it's too broad a definition. There are people that sell insurance only and maybe do a little bit of planning because maybe their firm gives them a software tool. They might be able to call themselves a financial advisor. On the flip side, there are CPAs that are bound by a code of conduct and standards and all these things, right? And they may call themselves financial advisors. So in this group setting, we're like, okay, so if we don't want people to shut down and like think that we're, not worthy of a conversation, what do we say? And the answer is, I have no idea. So where I landed was I'm just going to tell people I'm a CPA and I do planning and comprehensive wealth management, and I try to help people with life's journey, and that's it. And so far, nobody is kind of, at least to my face, nobody's been like, I can't talk to you, or please don't, come near me. There hasn't been any of that. But I do think that it's too expansive a definition. And so, I guess technically I'm a financial expert. I'm also finance committee chair for Susan G. Komen, one of the country's largest nonprofits. And so I think I have license to say this. Financial advisors, they do good work. They're well intended for in the vast majority of cases. I do think that. But I think the definition is too expansive to inspire the same degree of trust in the public as CPA. When you hear CPA, even today, it's one of the most trusted professions, maybe even the most. I don't know. I haven't looked at rankings, but the brand, the designation, it tells you something about the person, and even if you don't know what that thing is, all of us who are CPAs, we know, there's the AICPA, there's a code of conduct, there's a professional ethics framework. There are things that we do to hold ourselves to a standard that will inspire trust. And I think there are other aspects of industry and financial services where somebody could hold themselves out as a financial advisor and do so legally, but maybe without the same degree of um, compliance concern that we all have. And, frankly, it all ladders back to just doing the right thing. These things like codes of conduct and professional ethics frameworks, these are there to make sure that professionals do the right thing on behalf of their clients. Um, so I thought I'd throw that out there because I myself, I almost, it's hard for me to say, oh, I'm a financial advisor, because the definition is just so expansive. It's almost like, what does that mean? I had a group of business owners in my office earlier today, and it took me 2 minutes to explain the difference between what this firm does as a fiduciary and what somebody like an Edward Jones does, or somebody like a John Hancock. And there's nothing wrong with those companies. They fill a need in the market, um, but it is an expansive definition, and I think therefore hard for people to buy into the trustworthiness of it.
Okay. So tell us what is a fiduciary? What was your 2-minute explanation of what is a fiduciary versus any other firm that might say financial advisor as
Yeah.
well?
Sure. Yeah. So I mean, we're not the only one, right? And there are combinations of things that I believe are powerful. So CPA, boom. I think it's a trusted brand. It's a trusted designation for all the reasons I just mentioned. So I think that's a starter thing. When you think about fiduciary, that label basically means that you have a legal obligation to only act in the client's best interest. So you've got that there. Um, at some point, if your listeners and viewers are curious about, how do you pick an advisor, or how do you know where to go for trusted financial advice, one of my key points that I would describe as paramount, I do think you want to find somebody who's a fiduciary. I think that's a very appropriate way to think about bringing somebody into your life who's going to be a partner, in particular, a lifelong partner. But good advisors should be with you your whole life. They should be there helping your family and your business and your kids and your grandkids. That it's not a short-term thing. It's I would almost call it like a strategic partnership. It's like a strategic alliance, and you want somebody who would do the right thing anyway, but it's nice to know that they're obligated to do it too,
For
right?
sure.
So that there's not the temptation to go in a different direction. And so at 50,000 feet, that's sort of how I describe it. Our firm, how I describe our points of differentiation. So I kind of start with me. So I'm somebody who has financial expertise, but I also have business expertise. So when it comes to business owners, matters of business management, um, being able to collaborate effectively with other professionals like accountants and attorneys, and well, I am one. So as it turns out, we have a lot in common, and that's helpful. Um, those types of things I use to describe it, but we operate within three lanes of focus. So the last lane of focus is the investment management for us, which tends to be the first lane of focus for many of the other firms because they want to grab onto your money and charge you to manage it. For us, it's a little bit different. We start with financial planning. I have a fundamental belief, I've always felt this way, that everybody really should have some form of plan, whether you choose to call it a financial plan or not. You should have a North Star. You should have a direction for you and your family. So we spend a lot of time really nailing that. And we don't, necessarily start with um, CPA-like things, right? So we're not necessarily going after, okay, tell me exactly how much you think you're going to need when, and we're going to model that. It's not that. We start with, tell us about your values. Tell us what motivates you. Why do you even care about money? What is it about money that's important to you? Those types of questions, because for our clients and for me, if I'm going to be able to take care of somebody, I need to know what drives them, what makes them tick. And believe me, being in this business, I knew it before, but I'm reminded of it every day now. No two people are different, or are the same, I should say. No two families are the same. In a very anonymous way, I've had somebody tell me already, I want my last check to bounce. So the plan
Okay.
that you helped me come up with, on the day I die, that balance should be -$1. I'm like, well, you have kids. Do you want to leave anything to them? Nope. -$1. Okay. And
That funeral director is going to be pissed.
funeral director is going to be
That's
pissed.
the last check.
That's right. Yeah. So, on one end of the spectrum, you got that. And on the other end of the spectrum, there are a lot of families that see it differently. They want to cover college for the kids, full freight, paid, right? They want to retire and leave a boatload of money to their kids and grandkids. So, no two families are the same. No two individuals are the same. So the idea is, do you have somebody that you can trust, which I think is the second paramount thing I mentioned. So are they a fiduciary? And then two, can you find somebody that you trust? Because this is somebody that should be with you through the ups and downs, the thick and thin. And by the way, nobody's perfect, right? So I have no delusions that over the next 40 years, if I do this long, or maybe 30 years, that I won't make a mistake. And so, part of it is I need clients, and I would hope for clients that would show me grace because they trust me in a moment where if there's a mistake made, we're all human, right? And same thing with them. If it takes them 8 weeks to respond to an email and I'm chasing them every 5 minutes, okay, we want to respect each other that way. So I think, some of those things are important, but that's the planning side. Then we get into the tax planning side.
Can I
So
say something about the trust thing?
yeah,
Because
sure.
this is really interesting that I've seen from the other side. I have had really, really close friends and kind of extended family. It'll be in a text or it's usually in a text. Hey,
Yeah.
Erica, I have questions about retirement planning, and they're getting close. Like they're within a
Yeah.
stone's throw of retirement. They're like, I want to talk through it. And I'm always like, sure, let's like, I'm not an expert, but sometimes people just need a verbal processing. Like I want to get on the phone and I ask them questions just to help them process.
Yep.
And, and I'm always shocked. They're like, because I assume they have nobody to talk to.
Mhm.
And I'm like, oh, okay. Like, yeah, let's hop on. Just I'll help you process whatever you need to do, talk out loud.
Yeah.
And inevitably, we get to the point where they're like, well, I've talked to my financial advisor about this. And I'm like,
Right.
well, wait, why are you calling me then? You have a financial advisor. And do you know what they say?
Mhm.
Well, I'm not sure I trust what they're telling me.
Right.
And I'm like, oh my gosh, this person literally has possession of your retirement fund and is supposedly guiding you, and you're paying them to do that,
They
and
have
you're
the keys.
calling somebody who's not an expert because you
Yeah.
don't trust that person.
Yeah.
That feels like a broken relationship.
It's not awesome. I'll tell you that. It's
No.
not awesome. If you get to the point where you're not sure if you're getting sold a bill of goods or not, that's a pretty good sign. You may want to, pulse the market, pulse your
Yeah.
network, see if there's anybody out there that has somebody that they do trust.
Yeah.
And it's for that very reason, it's all fun and games until something goes wrong or you're in a big life moment.
Mhm.
And so, for people that do have advisors that they're sort of wishy-washy on, maybe they trust them half the time, maybe not. Um, Boy, delaying addressing that will be very painful in the event of a market crash, in the event of a life change that you didn't see coming that requires abrupt and quick and, elegantly handled planning. Um, you really
How about
need
missed
them.
opportunity? Like you said,
Sure.
market
Yeah.
crash. What about a market takes off and you weren't
Yeah.
in, like you had a life insurance policy instead of some funds.
Yeah.
Like I don't know. I'm just saying, like, sometimes we don't feel the loss that we never could have had, right?
Yeah, yeah. I mean, I've heard, it's a part of a pitch, right? But I've heard a pitch from people who open fiduciary businesses, and it goes something like this, like, I'm here to rescue you from your financial advisor. And for me, that actually resonates. It's pretty powerful because there are so many people out there. And I'm saying this because I did a little bit of homework on this before I invested in founding the firm that have no idea what their advisor does for them on a daily basis. So, the meter's running. They're paying the bill 12 months out of the year. They have no idea. Maybe they hear from the advisor once a year, maybe twice if they're lucky. What happens in between? No idea. And so and I have family members actually that I had a conversation with that when something like this, I go, okay, so you have no idea what they're doing. How do you know if you're getting a good value for the money you're paying them? And I had one family member say, well, I have no idea what I'm paying them. I said, okay, well, do you find that concerning? Because it sounds pretty concerning to me. And they said, well, yeah, I mean, now that you bring it up, yeah. And so I said, okay, well, let's pretend it's X, right? Um, how do you know if it's worth it if you don't know what they're doing? And 100% of the respondents to this question answered the same way, which was, well, I look at my statement at the end of the year and it looks like it's up. And it's like, okay, well, it might be up, but
Okay.
could it have been up more? Or maybe it's up, and I know this is going to sound crazy maybe to people who are listening, but was it up too much? Like, are you in a moment in your life where you shouldn't be taking the kind of risk that rewards you with a 30% return? Like we might be cheering this year, i.e., 2024. In 2025, we might be weeping, if
Right.
you're allocated a certain way. And so, I hear that a lot. And so, what we've tried to do at my firm is like a full transparency. We sort of like, here's all of it all at once. So, when somebody comes in, the first thing we talk about is how much it costs to work with us. We don't go through all the other stuff first. It's here's how much it costs. Let's get that shock and awe moment out of the way. And it's really not that bad when you see what we're about to tell you, which is what we're going to do to earn the fee. And then we lay out a service calendar. So we go, there are 12 months in a year. Every month, we're going to be doing these same things for all of our clients. So in January, we go through this, 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 and this. In February, this, and this. And people start to go, oh, wow, okay. It's sort of like what are you getting for the money that you're paying? Like, what are you buying when you hire us? And I think people really appreciate that. And it's not complex, it's um, we charge this and here's what you're going to get for it. And then along the way, here's how often we're going to be meeting. So within the service calendar, we call it out like you're going to be expected as a client of the firm to show up for a client meeting, virtually or live, this many times a year. And we tell you up front, it's in the calendar. We're meeting in March and we're meeting in September. And so it's like there's mutual expectation setting. And it goes back to my point about partnership. Like, in a way, it's a strategic partnership. Like, for me to best help you, I need you. And hopefully for, you to thrive, you need me. And that's where it's sort of like a beautiful thing that happens with a wealth manager that can do it the right way. So hopefully that makes sense. Yeah.
It does. So what, and I don't need you to go into like huge
Yeah.
detail, but say I'm a somebody who needs an advisor. What
Yeah.
should I be expecting at a high level? What should they be talking about so that I know if I have one, maybe I'm not in a great relationship, maybe they aren't um telling me all the things that I should be walking through all year. What are some of those high level points, 30,000-foot view, that
Yeah.
we should be hitting on either upfront or every year throughout the year?
Yeah. So I guess the first thing is before you even get into like what should we be hitting on, I would say if you're not in regular contact with your wealth manager or advisor, that should be a huge red flag. Um, there are a million reasons why it could happen. Maybe they've taken on too many clients. Maybe they're coasting. Maybe they're on the golf course. I mean, there's a million reasons, right? Um,
Sure.
it's a red flag. And so I use the term regularly. So what does that mean? Well, that part is subjective. So it's different for everybody. Somebody who has had a life scenario that has not changed materially in 30 straight years, with respect to income, health, family changes, maybe that person doesn't need to hear from their advisor more than twice a year. They should still hear from them at least twice a year. And I guess I would say that to your listener. If you're not hearing from your advisor at least twice a year, I'm telling you, you're getting hosed. That's not okay. And you should expect better. You should demand better. Um,
Okay.
Now, if you're like most people, or most families, or most businesses, because remember, a good wealth manager should be, if you're a business owner, they should be helping you with your business stuff too. Um, Things change all the time. Life changes. People have kids. People get sick. People get married. Estate planning is kind of a good benchmark I would point to. Like, none of us have tomorrow assured. So at any point in time, you really want to make sure your estate plan is as good as it can be, meaning as accurate as it can be. Um, your wealth manager should be all over you about that. They should be tracking every last thing, which means when they do check in with you or when you do have your quarterly meetings, my clients in the first year, there's quarterly meetings. In the second year, I call for quarterly meetings, but I do call two of them optional, and that's at the client's discretion. So it's like, I'm going to be here. If you want to have it, let's have it. And if you don't think you need it, that's okay. I'm not going to chase you on it. But when it comes to goal achievement, when it comes to trying to hit the plan, part of my job is to be your accountability partner. So I'm going to, I may chase you down on that part. Um, so the touch points are kind of like, has anything changed? Has your ambition changed? So that North Star that I talked about, you know, have your values changed? And this is okay, by the way, because people grow. People view things differently as they get older. Has your perspective on X, Y, or Z changed? Which is highly relevant to how you configure a plan. Have your actual goals changed? Have you had health things come up? And then, by the way, there should be an education component. So here's what's going on in the market. Here's what's going on with the companies that you're invested in. Here's what we did in the last quarter to make sure that you're set up for success in the context of your plan. Risk tolerance is a huge one. Back to my point about maybe you shouldn't be earning 30% if you're 2 years away from retirement and you've got enough, right? I mean, there are scenarios like that. And so you have to check in with people like, have your circumstances changed enough to the point where your own risk tolerances or appetite might have changed? Because that might equal, I got to change the portfolio in a way that helps keep the plan on track. So there's a variety of things. If your advisor or wealth manager doesn't know your spouse's name, your children's name, their birthday, those are all also huge red flags. Like, Um, I had somebody talk to me. Unfortunately, this comment was not about me, but I was asking, like, for wealth managers that you've had that you're pleased with, what's been the key differentiator? And I will actually say this gentleman, so he's a professor at one of the large universities here in Chicago. And he said the advisor, former executive, by the way, too, um, the advisor is like our family. He knows so much about us and he's so close with us. He's like family. And so to me, that's a big deal. Um, and then, I think your own personal preferences, like, um, the firm that you're going to work with or the advisor, either way, do they share your own maybe moral values or preferences for things like on, um, it could be everything from, do they support charities because you want somebody with a charitable heart? It could be, what do they believe in the context of their workforce? There's a million things, but somehow if you're not hearing from the person and if they don't really know much about your family, and if you don't know what you're paying them for, you're in a bad spot.
Yeah.
Yeah.
Yeah. I want to go back to you said something about accountability and that your
Yeah,
advisor is in part your accountability partner.
for
And I
sure.
don't think anybody ever talks about it like that. And I think it's such a huge shift in mindset when we're thinking about the financial professionals in our lives,
Mhm.
because I think the main point of financial professional point of contact we have is a tax preparer. And
Mhm.
I think in that relationship, we kind of pull together our documents, we
Yeah.
put them on the desk of the or the tax preparer, and we're like, here you go, and we wipe our hands of it and we go take care of it, and we just expect to sign something at the end of it, which by the way you're still responsible for everything you sign, so you should know what's going in there. But I think it's this relationship where it's like, I've done what I need to do, now you go do your job and then we'll be done. And if we take that mindset to an advisor, somebody who's really partnering with us, I'm going to say that's the wrong mindset to take, because what you're saying, and I think this is so key, is that I'm going to tell you things, you're going to ask things of me, I'm going to have homework to do. Like, Erica, you need to save XYZ every year for the next, or 10 years, or you need to go open up this account so then we can do this. Like, I have homework to do and you're going to hold my feet to the
Yeah.
fire, and we're going to like dance through this whole process together. It's not a, here you go, Luke. Now I'm done. Now you do your job.
Yeah. So, short story. So before I started the firm, I think I probably looked at 75 CPA practices to buy minimum. And the vast majority I found, well, first of all, there's a wide range of stuff happening within CPA
And when
firms.
there are,
Yes.
it's a whole nother episode. So you're
Yes.
saying CPA firm, like a tax firm, not a
Tax
not
firm.
a wealth.
Tax firm.
Okay.
Tax firm. In
Traditional.
fact,
We call
very
trad
specifically
firm.
tax
Trad
firm.
firm.
Yes.
Okay.
I would put a little asterisk to say some of them did audit work, but
Okay.
mostly tax. Most of the books were
Okay.
tax.
So not what you're doing now. You were looking at a different
Completely
niche of
different.
the industry. Yeah.
Yeah, I was just trying to be open-minded before I
Sure.
decided to, plant my stake, right? And so those, in almost 100% of the instances, they were 100% transactional. And what I mean by that is their whole model was people drop stuff off or they mail it in. Hardly anybody comes and sits down for their tax appointment anymore. People send the stuff in, I or my staff or whoever it is, they key it in. They're using UltraTax or whatever they've chosen, Listserv, and they crank out the tax return, they send the bill, and that's it. And so when I think about that, it's like it's brutal. Everybody loses in my mind in a model like that because you've got an opportunity for a CPA to have a meaningful relationship because they are a trusted advisor. If they talk to those people, if they were interacting with them in more of a live way, um, the client would be better off. There's no doubt about that. But if you look at the underlying strategy of their firms, maybe they're okay with it, but the only way they grow is they crank out more tax returns. And you know how you crank out more tax returns? By talking to less clients, because there's only so many hours in the day. And for me, that just wasn't a model I had any interest in. Um, and so, I do think that there's something really powerful about if you can find a wealth manager who can also speak the tax side. In particular, because at least in Illinois, I think the rest of the country is experiencing this too. There's such a shortage of good CPAs. They are out there, but there's a shortage of them and they're overworked. And, as an industry, I think there's a lot more demand than there is necessarily supply. If you can find a good wealth manager who can also support the tax side from a planning standpoint and work with the CPA, that's sort of an ideal scenario because then you've got more than one, you have your eggs in more than one basket when it comes to a huge component of your wealth. A tax miss, and I don't mean like an error on a tax return, but a failure to identify tax planning opportunities when it comes to things like tax diversification, that could be a several $1 million mistake between the age of 35 and 70 for most taxpayers, actually, if you're not thinking about it right.
You're
And
saying if it adds up, like cumulative through those years,
100%. Oh yeah,
wow.
100%. You guys will get this, so I won't even have to use real dollars. But if I invest the same amount of money in a pre-tax versus a post-tax, there are trade-offs there over time, right? And when you think about the accumulated earnings and what you're able to ultimately remove from the accounts at the age of 70, the outcome is different depending on how you diversify across the different types of taxable or non-taxable accounts. So failing to plan just on that could be even more painful than a market crash or terrible returns for a prolonged period of time, right? A lot of
Yeah.
people don't necessarily think about it that way, but having a really strong partnership with, again, a wealth manager who's got the tax side, or at least somebody who's in constant contact with an active, good CPA, that is so critical. There's just so much money tied up there. Even with some of the recent news, like what happens if the income tax thing goes away? Well, you're still going to need tax advice because it's going to be then, okay, we've got the VAT and we've got to figure out what that means for our business and the inputs and the outputs and all that kind of stuff, right? So the theme is CPAs are extremely important. And if you don't have a good one, you need one. And certainly from a wealth advisor standpoint, if you're not hearing from them, we got problems.
Yeah. I have one client who, out of all my clients, there's just one where I get to interact with the advisor. And that firm also has tax in-house. So we're constantly talking to them about estimated tax payments and retirement contributions. And it's probably one of my most favorite clients because of that, because
Yeah,
I know that that client has somebody that they're talking to at least twice a year in this case with this client, and I know they're getting good advice. I know the wealth manager has the tax, they're on top of it. They know what the actual estimates are supposed to be, and they're getting that the client's getting that information, and then we get to go into their business and be like, okay, you want to put 70K in, solo 401k. How are we going to do that in the business, right? Because there's this line of like, the wealth manager gives you the plan, helps you build the plan, gives you kind of the ingredients to the recipe,
yep,
but then you have to take it into your, especially as a small business, it's not like you're just getting a W-2 that shows up every year, right? The same amount plus 3% with
yep,
merit and cost of living. So we kind of
yeah,
get to go into the business then and be like, okay, if our goal is 60K in solo 401k, how are we going to make sure that happens? And you still get to pay yourself on a monthly basis. And we're moving all these pieces. And it's probably, yeah, it is probably one of my favorite relationships, client relationships, because it feels like we have all the information and the client is confident.
for sure. Yeah, I think I do not have all the standards memorized chapter and verse, so I apologize in advance if I get this one wrong, but I'm pretty sure there's even a standard out there that says when you do an engagement letter for something like this, you have to be very clear who's responsible for implementation, right? So this idea of clarity, and again, it's a subtle thing. Like the profession, this is why I love the CPA profession. It requires clarity on some of these key topics. You don't have that same requirement when you work with um, one of the retail investment firms that are in your local strip mall, not naming names, but
Yeah.
um, you know, you just won't get the same level of the same high standard that you would get out of
For
working
sure.
with somebody in the profession.
Okay, so I have a tangential question.
Yeah.
And I don't know if there's an answer for this. Is there a threshold of personal net worth or investment amount where somebody really should be looking at talking to an investment advisor, or really they shouldn't be? Like, we're just not there yet. We don't need to. Is there kind of a
Yeah.
rule of thumb threshold?
Yeah. Not that I know of, but I'll tell you what my advice would be if that's helpful.
Sure.
Okay. So, and by the way, if I sound really silly, if there is one, somebody just email me and let me know. But not that I know of. I think there are plenty of benchmarks on what you should pay as a percentage of your salary. In other words, like how much should you be willing to pay for the service based on what your pay is? But is there a point where your net worth crosses a threshold and therefore you should work with an advisor? I'm not aware of one like that. But how I would think about it is, and I'm going to use the term wealth management because I think most people, regardless of whether you have a little or a lot, you should be thinking about it in the context of wealth management, never mind financial advisor. So when you think about your own individual wealth, there's different things happening here. So there's the management of the money. Okay. That's a service. Then over here, there's having a financial plan. Financial planning is a different service than managing the money. Okay. In some places, not our firm, but in other places, tax planning is a different service. Okay. Um, my view is you should, as somebody who thinks they might need help, you should first consider, do I need a financial plan? My belief is everybody should have something. Now, it doesn't have to be fancy. Just like everybody, once you get to the point where you're married or you have children or you buy a home, you should have a basic estate plan. That's a non-negotiable. It doesn't have to be incredibly robust, but you should have something. Um, Same deal with a financial plan. Um, if your net worth is on the low side, it's okay. It might be a very simple plan and it might be cash flow based. It might be something that's just intended to make sure that we have a balanced budget in our household and we're achieving our savings goals. For somebody with a higher net worth, it should be a lot more complicated than that. It should be we have goals and we have dreams and we have aspirations and we have a wealth manager that's going to probability weight uh, the possibility of achieving each of those goals. They're going to run Monte Carlo analysis. They're going to do 1,000 simulations on how market returns go and everything else, and tell you like here's the likelihood of you being able to achieve those things. Um, Not everybody needs that level, but you should have something. Now, on the investment management side, you've got to, I think, just be honest with yourself. So, do you have the aptitude to do it? Some people are really good at investing. That's true. Do you have the time to do it? For me, at our firm, I make the point that your money management should be there really for one sole reason, which is to serve your plan. So I like the idea of connecting the two. But in my own firm, I do have an option where you could pick either I just want a financial plan or I just want investment management. I can tell you I offer that option to everybody. I haven't had one client take me up on it yet. They all want both because I think they see the value in the idea of having the two integrated. And in fact, I think integrated financial planning is the way to go, which means you're not just looking at your financial goals, but you're also considering things like insurance. And not somebody selling you insurance, but like, do you have the right level of risk exposure? Do you have the right level of coverage? Do you have the right liability protections if you're a business owner? All those things. Um, from there, then you should be thinking about estate planning. Um, we include estate planning as part of our service. So when you sign up for us for financial planning, you're not just getting a financial plan, you're getting support with estate planning and insurance and tax plan, all the things that I've talked about, college planning, you name it. So it really depends, like, what your objectives are. But I think everybody should have something. And I think people should be really honest with themselves about what they're good at and what they have time for. And if you see wisdom in this idea of having an integrated approach to all of that, then I think you go seek out a wealth manager who ideally is a fiduciary and somebody that you can trust. Very important. The most important.
For
Yeah.
sure. So what is that going to run somebody? How should I think about the costs on that?
So I can tell you what we charge. Well, I'll tell you what we charge, and then I've seen some of the strip mall kind of retail firms. I've seen their price structures, and they're all over the place. Um, in the past, I've heard benchmarks that like, well, if you're in an AUM model, which is short for assets under management, 1% would be the number. So on average, financial advisors or wealth managers, they'll
What
charge
does that mean?
1%.
1% of what?
Yeah. So how I would describe it, and this is actually how I talk about it with prospects. So if you were to ask me to manage $100 of your money in an AUM model, if my fee is 1%, I'll get to my fee in a second, but if my fee is 1%, then basically I'm charging you $1 to manage your 100. And so then you have to ask yourself, if you're somebody looking for those services, well, is AUM a fair billing model? Is it an appropriate model for obtaining this service? This one I have a strong opinion on. Um, so I would say it's the best model. And the reason for that, I think, is a fewfold. So if your fee is based on a percentage of the money that you're managing for somebody, as they do better, you as the wealth manager or the advisor, you do better. At the same time, if you do worse, meaning the client does worse, you're doing worse. And so it's like the purest form of partnership. Like we're fully linked. There is like incredibly intense built-in incentive for me to make sure that I'm doing a good job managing your money. And there's maybe even more of an incentive for me to make sure that your money doesn't take a real nosedive. And so I see a lot of value in this because it really is like it's active partnership. So that's the idea of AUM in general. Is that
Hmm.
how? Okay. And so then
Yeah.
um, some people,
Actually, can I pause you?
yeah,
If somebody's been listening to this podcast for a long time, they know that I've made grumpy sounds at the AUM model.
yeah,
And so they're like, why did Erica bring this guy on? Right. And I want to be fair to that. Like I, yes, have said anti-AUM model before.
yeah,
I also started this podcast saying that there's a lot of crappy advisors out there, and I get really frustrated with crappy advisors charging AUM. Like
yeah,
they're collecting 1% and their clients aren't hearing from them every year. And
yeah,
that's, or then their clients are calling me and being like, well, I
100%.
don't trust my advisor. I'm like, well, why are you paying them
Yeah,
1% then? And so that is my frustration with that.
yeah,
Um, so yes, there's a caveat to, in the past, I've said grumpy AUM. I think to your point, it can, when treated well, when treated in a fiduciary model, when your advisor is calling you, knows your kids' birth dates, knows your
yeah,
values, and isn't just collecting the check while he's on the eighth green, right? Like
for
there's a
sure.
difference.
Yeah. And I will say, so you and I are, I think, like-minded on many issues, and this is actually one of them. So I would also offer to your audience two things, more than one thing can be true. Two things can be true. So it could be that the concept is great, but the approach to implementation is terrible. So when I say I think it's, the purest form of partnership, I'm referring to the concept. And to Erica's point, there are plenty of people that can coast, which is sort of a way of saying maybe abuse that a little bit because they get your money, it's locked in. There's a perception, just like changing your tax preparer. It's a sticky relationship. People don't jump from advisor to advisor because it's just perceived to be difficult. Being on this side of it, I'll tell you, it's really not that hard. And I'd like to think we, do a decent job of making it seamless. But if it's done right, it's not only a good model, but it is 100% in everybody's best interest. That said, I was aware when I started the firm of the grumpiness that could exist around an AUM model, and I wrestled with this choice about, well, you know, what if somebody doesn't have a lot of money? Do I want to work with them? Um, and what I kind of arrived at was, of course I do. A financial plan, if somebody wants one, shouldn't be for the ultra wealthy. It just shouldn't be. everybody should have the ability to access sound financial planning. Again, it doesn't have to be super complex if the situation's not complex. But the peace of mind that comes from having a plan, I felt strongly that everybody should have access to that. So I also have a flat fee option. Okay. Um, and what I tried to do is blend these two things so that it was practical for me in the business, but also um, accessible. So the way I set it up is I basically have a financial planning fee. Um, and I'll tell you that number in a second. And then I have an investment management fee, and my schedule there is blended tier. So it's basically to say 0 to X is 120 basis points or 1.2%. X to Y is 100 basis points or 1%. And then as you bring, if there's more value in the account, then the basis points or the percentage goes down from there. It all washes to about 1% for most typical accounts. But if somebody brings a bunch of money, the basis point amount is far less. Now, what I do is, because of this connection that I think is so important. So if you bring over $1 million in our practice for us to work with in the context of the plan and investment management, I waive the financial planning fee fully. So the only thing that somebody would pay is the AUM fee. And included then is me managing the money and the firm managing the money, but also the creation of a financial plan, the insurance reviews, the tax reviews, all of it. Um, the financial planning fee standalone is a 3 payment setup. So I go $4,800 down, then 3 months later, 2,400, and then 3 months later, 2,400. So it's $9,600 in total, 3 payments. The reason the first payment is bigger up front is because there's a heavy lift to get somebody set up. We have to enable the technology for that person, get them set up with a client portal. There's this, big one-time review of documents and documentation to get the plan sort of configured initially. And so we do it that way. But if somebody brings a certain value to the table, then we waive that fee. And that was sort of my way of saying, okay, I'm not going to have like a minimum for people to work with me. Like that made me cringe. The idea of like, oh, if somebody only has 200,000, I'm not going to work with them. I hate that. I just think it's just not my style. I wanted this to be accessible, but at the same time, this is a business and I have costs, I have overhead, and I have a family, right? And so, the idea is to find that balance of accessibility, but fairness for both. And I haven't, I actually had a conversation about this with Kelly, my better half, yesterday. I haven't had a single prospect um, ask about, like, attempt to negotiate the fee. I haven't had anybody say they think that's unfair. And so, her point was, well, maybe you should raise it. And my point was that's against the idea of what I'm trying to do here. For me, this is my second chapter. I'm doing this as much as a give back as I am a profit motivated venture. And I want it to be accessible for people. And so this was my way of making sure that, I didn't bankrupt the place out of the gate, but also I kept things accessible for people that were really serious about it. I also, just one other thing on the accountability, if I can, I do think if you find somebody who is willing to charge you $100 a month, for example, or $200 a month, I would be skeptical of that personally, just from the vantage point of how serious are either of you about committing to this? If somebody asks you for a decent slug of money down, which is sort of the structure I just outlined, right? Um, Odds are I'm going to have your attention, you're going to have mine, and we're going to hold each other accountable. If it was a couple $100s, it'd be real easy for either of us to be like, it's just a couple $100. Who cares? I'm not going to do that. I'm not going to follow through. I'm not going to follow up. So there's a lot that goes into it, but I'll tell you the fees are all over the board. There's a document called an ADV that I think all registered investment advisors are required to have, and it in total clarity outlines exactly what the fee structure is for the firm. And I've looked at a lot of these. I don't know what the number is, maybe 30 of them or something. The fees are all over the place. Like I've seen people charge on an account 0 to 250,000. They'll charge 300 basis points or 3%, which to me is like highway robbery, but
Yeah.
they'll do it. Now they'll do a blended tier, so they'll back it down once you get higher, 500,000, 750 million. But it is all over the place. So I think you just have to kind of like do your homework. If you're in the 1% neighborhood, you're probably not out of the realm of the norm. And then for the financial plan, it just depends on how complex your situation is. I can tell you, I had a terrible, well, I won't say a terrible, I had a not like super awesome experience at one point with an advisor, and I think I paid 23,000 um, for ours, and I didn't get a quarter of what I'm selling as a service here in this firm. And so, that was also motivation for how I set up the firm here to say like, if somebody's going to pay half of what I paid, they should get at least double what I get out of it. And so that was kind of the idea.
So
Yeah.
so just to reiterate, the 1%
Yeah.
feels like a good ballpark, but the caveat to that is you're getting a lot out of that. It should feel like this guy or girl won't stop bugging you and telling you to do stuff that are good for you, right? Like this should be a good
And it's not
relationship
just
where
that. Yes, but it's not just, it's also what do they bring to the table? So, for example, I custody with Schwab, which means when somebody wants me to invest their money, I never take possession of the cash, right? It goes to Schwab, and then I just have the ability to manage the account. But as an RIA who is tied up with Schwab that way through the strategic alliance, I have access to their liquidity offerings. I have access to their trust departments. I have access to their banks. I have access to you name it. And that's just with Schwab. I'm independent. So I also have access to anything else that I think is in the client's best interest. So another example, there's something out there called Dimensional. Some of your audience may have heard of it, but Booth, so like the Booth School of Business in the University of Chicago. So Booth actually is like the founder of Dimensional, as I understand it, and it's a whole set of mutual funds, and I think they have ETFs and some other products, but they're basically founded in academic logic. So they trade on academic principles. That's like their shtick, right? If I've come across a client who, from a values standpoint, maybe they're a professor, right? This is a great thing to put in front of them to say, I have the ability to invest and to appropriately diversify using funds that, as a principle, are aligned with your own philosophies. Is that something you're interested in, right? So I think part of it too is what the advisor can bring to the table. Not every advisor has access to things like that. I do, and our firm does as an independent. But others, like if you're tied to a brokerage house, and I'll pick on maybe, well, I won't use a name, but let's say the retail in the strip mall idea. You go in there, you're basically getting their stuff, right? And
sure
their stuff may not be the stuff that you want or need.
your options are limited in that case.
They're limited. They also, if I have time for a 2-second story. So I was at a business networking event yesterday, and there was somebody from said retail strip mall investment shop, and they started doing a presentation on financial planning. And so, and this for context, right? This was a super nice individual earlier in their career, but you could tell not, they were still green, right? To use a
Mhm.
corporate term. And a member of the audience threw a question out there, which they thought would be a softball, which was for all of the people in the room, are there better investments than a 529 account for saving for college? And so the person thought about it for a minute, and he said, yeah, there are better investments than a 529. And for the people in the room that knew anything about that, you could tell they all kind of cringed a little bit. And it's like, this person doesn't even understand that a 529 is a vehicle, not an investment, right? You can have investments inside the vehicle. Wasn't able to articulate that. And then afterwards, he came up. I didn't say anything other than, hey, really nice job. And he said, it's great to meet you. What do you do? And I explained it to him. And he goes, man, he goes, it's so cool that you're a CPA because that means you could probably talk to your clients about tax stuff, right? And I said, yes. He goes, yeah, we're not allowed to even talk about tax stuff at my place. And so like that was just one of those moments for me where it was like, and he wasn't being critical of where he worked.
Yeah.
I mean, he perceived it as like, okay, there's a gap here in my ability to take care of a client's needs because I have a blind spot here and the firm doesn't let us go near it. And so, when I hear that kind of stuff, I am inclined to say you want to try to find a fiduciary and you want to try to find somebody who does have tax chops if possible. They don't have to be an expert. They don't have to do the tax
Sure.
return, but they should be able to talk to you about it and help you through some stuff, especially if you're charitably oriented. Imagine people who are charitable in nature. I'm never going to say who, but so I have a client who gives a lot, and not through any type of tax advantage vehicle whatsoever, right? They have an advisor. The advisor has not taught them about what a donor advised fund is or anything else, and they're just leaving value on the table, right?
Yeah.
You don't want to be in one of those situations. So I would say if you're listening and your needs, if you have things like that in your life that create just a little bit of complexity, you want to find somebody who fits the description I gave, I think.
And I think there's so much I hear from people like our listeners listening is like they don't know what they don't know. And it's such a tough situation to be in to you don't know what a donor advised fund is, so you don't know to ask about it.
Right.
And maybe you do give tens, hundreds of thousands of dollars a year and it would really benefit you, but nobody's even suggested it to you because you just have a less than capable, in that direction person that you've hired. And it's just so how does somebody I don't know, Luke, how does somebody know what they don't know? Like how do you even what work would you do to go educate yourself or talk to people? Is it just like
Yeah.
setting up meetings with different advisors to find out the things they might say to you? Is that the path somebody should go down?
Yeah. So I think there's like two things that come to mind. So I do tell everybody that I meet with as a prospect not to make their decision on the spot. Most probably wouldn't anyway, but I don't want it to be a pressure thing. So I tell everybody, like, go home, sleep on it, think about it for a few days, and then let me know. But I also tell people to absolutely shop around and talk to other advisors. And um, what I have found, and this is a 100% true story. I do have a client who told me this. They took me up on that. They interviewed seven advisors, and they said it was so obvious and clear that your firm was the right choice for us, really for like one reason, which was, well, two reasons. You, like me, which I was grateful for, but you showed what we were buying. So like you had a service calendar. You showed what things you're going to be doing every month and you set expectations for us by doing that. And it's like so simple, right? But like
Yeah.
none of the other seven that they talked to did anything like that. They just said we charge AUM and you give us the money and to your point, we'll be on the eighth green come June and
Yeah.
you know good luck getting a hold of us.
Thanks.
Haha, by the way, right?
Right,
Like
right.
that. So the first thing that comes to mind is shop around. The second thing that comes to mind is AI. So I will be the first one to tell you that I don't believe AI is living up to its hype yet. I firmly believe it will at some point. But when I started the firm, I looked at the most common tools that were hyped up in the industry here. And I found all of them to be unacceptably inferior for client use. And so I didn't implement any of them. Bad conclusions, misinterpretations. And I'm not talking for the tech forward people. I'm not talking about hallucinations. I'm talking about they ingested data and news feeds and things like that. And they said, here's what you should counsel your clients on as a result of these things. And the conclusions were just dead wrong. Like I would never dream of saying to a client, this is what happened as a result of that. But what I do think it's good for, if you go to Gemini or ChatGPT or whatever, somebody who is not financially oriented at all can just have a conversation with the chatbot and say, hey, I'm going to interview a financial advisor. What should I ask them? Or, hey, I'm thinking about donating $1,000 to the charity of my choice. What should I be thinking about? I think it's great for that. It's not 100% accurate, not even close, but it's enough to, I think, get you to start to think about, okay, if it tells me that maybe there's this thing called a donor advised fund, maybe I should call somebody about that. There might be somebody out there who has expertise in that. So I do like the idea of using that as maybe a steer, as directional information, especially if you don't have anybody in your network that you can ask. Um, so I would kind of do that. But in the end, at least for now, I will tell you it is not to be relied upon for the provision of mission critical advice. It is just not, So if you're going to it might be fine if you're trying to figure out like something extremely basic, like should I pick savings account A or B? That might be okay. But, if you're trying to figure out like, should I have X? Should I have little Johnny as the trustee for my gift trust? Don't use it for that. That's not an appropriate use of it yet. Eventually, it might get there, but um, one of the reasons I thought the RIA business was special. In the end, yes, we have to be financial experts to do this, but it's a people business. In moments that matter, people want to, and I think this will be the case even 100 years from now. People want to talk to another person. If I'm about to retire, if I'm about to quit my job at the age of 67, I want somebody who's an expert to look me in the eye and say, it's going to be okay. You can do it. I don't know that I would trust a chatbot. I'm not sure anybody would ever trust a chatbot, uh,
No.
at least as I see it today. So,
So I like your recommendation, and I'm gonna put this to the listeners. I like your recommendation of using AI, whatever platform you use, as a springboard for talking to advisors. I think your suggestion of talking to many advisors, whether that be 2 or 7, and coming to them with the same questions to each one and seeing the response you get can help inform what relationship you want to move forward with. And I think the way, if we're talking tactically in AI, because I love to leverage AI where I can, I think it looks like telling your AI chatbot, I'm a 40-year-old woman, married. I have 2 kids. I'd like them to go to college. I want to pay for their college. I donate X dollars a year. We make X in income. We want to retire by X age. Tell me, and then so give it a little bit of information. Don't give it any personal information that you don't want to put out into the world, and
yeah,
say, what are 10 questions that would be good to ask advisors as I interview them to hire? It's going to give you 10 questions. They're not 10 are not going to be great. You're going to weed out half of them probably. You're going to change some of them, but it's going
yeah,
to give you this little bucket of questions that you can then take all the same questions to different advisors and see what response you
right.
get and help that to inform what your next steps are.
I think that's right. And my asterisk to that would um, be careful if you ask the chatbot anything that has to do with numbers. On my business's website, I linked up an article in the insights section about how incredibly terrible AI is at the moment at doing basic math, and it's frightening. You guys, in fact, maybe Eric, I don't know if you have a way to like post that link or something, but
Sure.
um,
Yeah, I'll throw that
uh,
in the show
yeah,
notes.
maybe afterwards we can find a way to do that for anybody listening. Now, it's a point in time study, but it was a point in time study done by Apple, and the gist of it was they asked some of the AI chatbots like ChatGPT to do like a second grade elementary ed math problem, and it could do it. And then they added like an extra parameter that made no sense. So like, what's 2 plus 2? It knew the answer 4. Then what's 2 plus 2 if there's also an apple? And then the whole thing broke down and it couldn't do it, right? And it's just an example, but one of the things that is not to be relied on, don't ask ChatGPT to do the math for you and expect it to be right every time. Sometimes it might be right. But again, for mission critical things like a tax calculation or I'm going to try to calculate what my advisor is going to charge me in a year. You have to, you be professionally skeptical, apply skepticism to that answer, and make sure you validate it because there's a good chance it may not be right.
Yes.
Yeah.
Human oversight is key.
Key, very
Right.
key.
Well, Luke, this was absolutely wonderful and enlightening. I think I've walked away with hopefully the same thing our listeners has is that trust is paramount.
Huge.
Find a fiduciary.
Yeah.
I'm also taking away, I think that independence in a advisor is huge. It sounds like that gives you the most options. And as somebody who likes all of the options, that would be important to me. So hopefully important to our listeners as well. But I so appreciate you being here and just sharing everything you have and having this sitting down with you, Luke, after our long years of history has just been a treat. So I appreciate you being here. If somebody wants to reach out to you, what is the best way to talk to Luke Sauter?
You can email me. So it's luke.sauter at my company name, which is vidarrow.com. And I'm pretty all over email. So I think that's usually the best way. My website is vidarrow.com. And I'm guessing maybe Erica, you'll link some of this stuff up.
Yeah,
But
we'll link all that in the
um,
show notes.
yeah, yeah. I'd love to hear from anybody. You will never get a sales pitch from me. I'll just explain what we do here. And if we can be helpful, we'd love to do what we can for you, your family. If you have clients that you think would benefit from somebody who does comprehensive integrated wealth management, that's us. And Erica, this is a hell of a reunion. I'm so proud of you, and I really am appreciative that you let me on the show too. I hope I didn't bore your listeners to death.
I'm sure you didn't. Thank you so much, Luke. This has been a treat.
Talk to you soon.